the festive season kickstarts, what's the visibility like? Shreevar Kheruka, the MD, joins in at the show right now. Mr. Kheruka, great, good to have you on ET Now today. Firstly, tell us about how the demand trends across categories have been as the festive season just kicked off.
So the demand has been, picking up as always it does. In the festival season, I guess Onam starts first, and similarly at the same time we have Ganesh Chaturthi and so on. So we've seen the initial, pickup of demand started, but obviously the last month before Diwali is a peak, and that is yet to come. We are quite hopeful though. We are seeing reasonably strong demand across categories and across geographies of the country. So we're hoping that the momentum of the last couple of years continues.
Reasonably strong momentum and the festive season has started well, but what's the split between online and offline channels, and where is the company focusing on, and let's say what could be the split, let's say 12, 18 months from here on?
See, all the channels, our vision is to be the most customer-centric company in India, and therefore we want to reach the customer. The channel is we have to be present where the customer is present, and that's the customer decides that, not us. As far as what's happening in the first quarter, definitely trade was slow, and I think that all the consumer companies were saying the same thing. There was elections, there was a very strong heat wave. The second quarter, we have seen a pickup in trade for sure, but even other channels such as e-commerce are growing, and there's a lot of money being put into that channel as well. Even corporate gifting, we're seeing reasonable demand there. So across the board, I see good growth. In the long run, I think definitely each of these channels will have growth. E-commerce may grow slightly faster than others, just purely because of the convenience of it. But I don't see anything materially different, even compared to trade.
Right, and the company has been growing at a 25% CAGR over the last 6 years. So, what is the growth that you're targeting now for FY25? And more importantly, which is the category that will drive this growth?
See, it's improper to give short-term targets. We've always maintained across all our communication that as a company, we expect to achieve 15 to 20% CAGR on a midterm basis. Yes, you're right. In the last few years, we have been growing faster. Obviously, the base effect also makes it difficult to grow at the same pace as you grow larger and larger. So I would still say that broadly the target would be in the 15 to 20% range. If we do something better, then that's a bonus for us. As far as the categories which are driving the growth, definitely glassware. We've invested a large sum of, a large capex into manufacturing glassware in India, which was earlier being imported. So that import substitution is likely to drive growth of glassware category. And in the short run, in the next year or two, I do expect glassware to lead growth on our categories at least.
Right. Shrivar, analysts believe that, premiumization and the shift towards in-house manufacturing will aid margin expansions for you. What are your EBITDA margins that you're targeting in the coming years?
This is the same as before, whatever, statements I've made in the past. If you see our current EBITDA is in the 15, 16, 17% range. And as two things are going to happen in the next 2, 3 years. Number one, a larger chunk of our sales will come from our own manufacturing. And our own manufacturing has a lot of capex, and therefore the margins have to be higher to justify the capex. So as our own manufacturing becomes a larger and larger chunk of our sales, we'll see the margin expansion happen there. On the second front, we will get operating leverage. We are set up to be a much larger company than what we are today, and therefore our costs are, already incurred, which to support the larger base. So as we hit that larger base, the cost will normalize, and therefore operating leverage will help us improve our margins. So on both the fronts, the larger share of our own manufacturing plus the operating leverage, I think over some period, over the next couple of years, we should go from 15, 17 to 20, 22% EBITDA.
Sure. You also mentioned that domestic appliance is perhaps one of the new growth engines that you're watching out for. But talk to us a bit more about that in terms of the opportunity size. Any specific product lines that you're watching out for very keenly here?
So look, we are a kitchen and table products company, and therefore we continue to look at categories in that space and see where opportunities lie. We are, what we say, a mass premium player. So we are not looking to play in the lowest end of the market, but in the premium end of the market is where our brand is situated. We do see attractive opportunities there across our categories. Of course, appliances, there was a large pickup of sales of appliances during COVID. People were, more interested in cooking more exotic food because, they couldn't go out to eat. So people were cooking all kinds of, exotic foods at home, from a pizza to waffles and so on. So those appliances, which were traditionally not sold much in Indian households, have picked up in sales, and that's a trend I see continuing. Apply. We have five categories: glassware. Then we have non-glassware, in which appliances is there. Our stainless steel insulated bottles are there. Our servingware, our steel servingware is there, as well as an opalware. So there's five categories, and frankly, the market is large in all these categories, and we are focused more on substitution from plastic and steel in some categories to glass, or then from plastic to steel in other categories. So we believe there's the overall growth of the market going to happen, as well as substitution from other materials to glass or to steel, as the case may be. And we feel reasonably confident that our portfolio is well placed for that.
All right, thank you for taking time out and joining in with the projections for growth and what is likely to drive it.
If you like this video, then like, share and subscribe to ET Now.